Okay, we're going to get into our next panel discussion now, titled "Where Am I Putting My Cash?" And it's going to be a great discussion because of the diversity of panelists we have up here. Everybody from, you could say, a geopolitical philosopher through to a traditional precious metals investor, and my go-to guy for emerging technology. I'm going to let these gentlemen introduce themselves, so if you could please take 30 to 60 seconds and just let the crowd know who you are, what you do, and why you're here. Can we start with you, Jason?
My name is Jason Hamlin. I run Gold Stock Bull investment newsletter. We cover precious metals, mining stocks, cryptocurrencies, and cannabis stocks. A growing percentage of what we cover has been the crypto space over the last couple of years, just because of the innovation, excitement, and investment returns there. So that's goldstockbull.com.
Thank you, Jason.
I'm Jayant Bhandari, and I work as a financial analyst. I advise a few institutional investors. I used to work with Frank Holmes earlier and also Doug Casey in the past. I also do a fair bit of writing on economics, politics, and cultures, particularly related with the third world countries.
Thank you, Jayant.
My name's Chris Parry. I'm with Equity.Guru. I established Equity Guru 2 years ago after some time at Stockhouse, where I learned all about the dark side of financing in the mining world. Equity Guru's mantra is that a lot of people who were at this show this year are going to be dead by this time next year, so we ought to get some new investors in. We specifically talk to the younger crowd. We talk to non-investors and tell them how to be investors, that investing isn't just for RSPs. We've introduced them to the markets through the cannabis space, the blockchain space, and energy metals, and now we're getting them into the holes in the ground.
Okay, thank you, Chris. Now, Jayant, we're going to start with you. Now, I love reading your work, and when I'm reading Jayant's work, I feel like I'm reading very authentic, boots-on-the-ground journalism, and I appreciate it. For example, a couple of years ago when Prime Minister Modi evaporated essentially 85% of the Indian currency, Jayant was on the ground in India in the lineups with civilians who were exchanging their currency, not because he needed to be there, but because he wanted to be there to get the true sentiment on the street. What stands out to me is that you're very bearish on almost all emerging economies. Would you say that's true?
Yeah, except for China. There is nothing like emerging economies. There's only one emerging economy, and that is China. The rest of the so-called emerging economies are third world countries, and they will actually continue to be third world countries and very likely implode.
Now, that's broad. Is there one fundamental reason you would make that statement, or is it a case-by-case basis as you go through Brazil, Russia, India, etc.?
Well, East Europe might be a bit of an exception, but the problem with the third world is that the institutions of the third world were created by European colonizers. And I'm making an exception of China here, but the third world institutions can only be run by Europeans. The locals of the third world are completely incapable of running those institutions. After European colonizers left, across the spectrum, the third world became tyrannies. And they have continued to become tyrannies, except that in the last 30 years, economic growth has overshadowed the continuation of increase in tyrannies in the third world.
Now, mainstream media loves to discuss the promise of some of these economies, India being one. You spend a lot of time in India, so what's really happening there?
I think India is 20 years behind Pakistan in terms of Pakistanization of India. Hindu fanaticism is increasing rapidly. The three arms of government are no longer separate arms in that country because the local culture does not understand that these three arms, judiciary, legislature, and executive, must be different arms. They are completely in bed with each other today. So the rule of law does not work anymore. It's the rule of people that now works in that country. that country is rapidly becoming a very tribal and fanatic country, and eventually the ethnic conflicts in that country will lead to serious civil war-like problems in India over the next few years.
Okay, now one more country I wanted to touch on because it makes a lot of headlines, positive and negative, and you made some comments to me earlier today about South Africa. Could you elaborate on what you're seeing occurring in South Africa right now and maybe a prediction for the future of South Africa?
Right, I have been to South Africa many, many times. I have enjoyed my visits to South Africa. South Africa is a very strange country. Only 5 to 6% of South African population is white people. Now, they are a minority in that country, which is a very peculiar thing on this planet. Usually, white people are in majority in whichever country that they have a dominant existence in. Now, after the end of apartheid, South Africa has increasingly gone into the hands of junkies. And the government, people in the government increasingly talk about killing and butchering the white population. The Western media does not want to cover it because white people are not seen as minorities. White people are not seen as victims on this planet. The end result is that the troubles of white people in South Africa is not covered by the international media. My view is that South Africa is, on a fast forward basis, becoming a third world country from what it used to be, which was a first world country. It will very likely go into a civil war-like situation sooner rather than later.
Okay, now in this scenario, the only economy you're betting on is China. So the most important question for this crowd is how does that affect your investment thesis?
China is supposed to be a communist country. So a lot of people don't like to give credit to China for what it has achieved in the last 30 years. This country has grown from a third world hellhole into a very strong emerging power. Some of the electronics that now comes out of China meets the Swiss and German specifications in terms of specifications and in terms of quality. This country continues to grow at 6 to 7% growth rate, which is outstanding when you consider that it has been growing for the last 10 years. They have done a fabulous job. What underpins everything for me in China is that when I go to smaller towns in China, I see bookstores that are now 3 to 6 story bookstores in which you can buy books written in Mandarin, in Chinese. You see nothing like that in any other third world country. There is no culture of reading in the Middle East, Africa, or in South Asia. The only third world country where I see reading habit picking up very rapidly is China.
Okay, thank you. We may come back to that, but I want to ask you some questions, Jason. Earlier this week, you were talking to me about the everything bubble, your idea of the everything bubble. And could you explain to this audience, might be a redundant question, but what's in the everything bubble?
Sure. This is the idea that central bank policy has inflated multiple asset classes to levels that they're extremely overvalued. So whether stocks or equities or real estate, and that when any of these bubbles burst, there'll be a domino effect where the other bubbles burst with it. So we have the potential of an economic crisis that would be worse than what we saw in 2008, 2009. And it's part of the reason that I believe it's important to hold assets in your portfolio that are non-correlated to the traditional financial system and to this everything bubble asset classes. So this is one of the reasons I believe investing in precious metals is a sound idea, and I think cryptocurrencies fall into that basket as well.
And precious metals, just the hard assets, or are you looking at equities as well?
Looking at a mix, obviously you want to hold the physical bullion in your possession. as an insurance hedge, a crisis hedge kind of thing. But right now, precious metal mining stocks are very undervalued in absolute terms and relative to the metals. So if you look at a HUI to gold ratio and you look at where that chart is, mining stocks have only been this undervalued relative to gold at one other point in the last 20 or 30 years. So I believe that when the bull market gets going again in precious metals, we're going to see extreme levels of leverage from some of these mining stocks that are really beaten up, particularly the juniors and mid-tier companies.
Okay, so the hedge you're looking at is crypto, you're looking at precious metals. In the event we know the US market will collapse in 2018, what does your portfolio look like?
Yeah, those are two of the biggest portions of it for sure. Crypto is sort of anti-fiat, right? It's not inflationary, or at least it's disinflationary. Right now, there's 17 million Bitcoin have been mined out of a total of 21 million. The actual total supply is probably closer to 19 million when you consider the amount that have been lost or misplaced. So 90% of the Bitcoin that'll ever be in existence is already out there in the supply. So the value as adoption increases is going to continue to go up over time, in my view. And in the event that people lose faith in government currency or central bank currency, you want to hold a certain percentage of your portfolio in precious metals. I also view crypto as an excellent hedge to such a scenario as well.
All right, Chris, we're going to move over to you. Now, Chris's business, Equity Guru, has done a fantastic job at capturing a younger investor demographic. And we've seen a crypto bull market recently. We also saw a cannabis bull market, and Equity Guru covered both of these sectors very, very well. Have you seen the effects on investor demographics as a result of these bull market shift at all?
Yeah, in a way that I think most people don't really look at. As I walk around out on the floor, I see a lot of guys presenting their stories in the same way they were presenting them 10 years ago. In a younger crowd, you get people who are, they deal in baseball stats, they play poker, they look at numbers in a different way than let me see the balance sheet. And part of that is they look at what is a company doing to promote itself. I can't tell you how many good mining companies I've seen put out a resource estimate and no one pays any attention because the story's not being actively promoted. Whereas you have garbage companies that are being promoted to the moon. Everyone knows they're garbage companies, but the stock still goes up because we know that the ride's going to keep going for another 3 or 4 months. So what I'm finding now is that, especially with the younger audiences, they don't really want to know the fundamentals of the company so much. They're gambling. They want to know what's going to happen in the next 2 weeks, who else is behind this thing, who's promoting it, who's marketing it. And companies are spending $1 million plus a month to market themselves to get $12 million in extra market cap. So from my perspective, when I'm trying to tell people, well, where's a good place to put your money, it makes it more difficult because do I start pointing people towards these bullshit companies that I know are going to go up for the next 3 months and then down in 4? Or do I stick to the old game plan of like, well, this is an actual company doing real business that in 2 years will still be around? And the answer is it's kind of a mix. Good companies that don't promote themselves are bad companies. Bad companies that only promote themselves are bad companies. So what I'm looking for are sectors that are reasonably hot, that have long-term strategy to them. Blockchain was a great run in October, November of last year, but it was all essentially on promise. A lot of blockchain companies have taken on the discussion of what's more important, a proof of stake or proof of work in terms of the cryptocurrency world. And what I'm telling people is proof of business is actually what's most important. A blockchain company that just mines crypto is a bullshit company. A blockchain company that mines crypto because they're going to use it for some way, or they're going to use the server farms that they're building for a plan B that makes more money, or there's got to be some sort of actual business to it rather than just we mine crypto. Because you know what? I can mine crypto. I can set up my garage and I can put some rigs in there and I can do the same thing that I might pay another company $30 million to do in Iceland. What else can you do? If we could find gold in our backyards, we wouldn't need the guys out there on the floor. We'd do it ourselves. So added value does the company that is being advertised to me have that isn't inherent? And that goes to the cannabis industry, it goes to the mining industry. In January, I stood on the stage here and said, everybody in the room sell everything you have that's marijuana related. And all of my clients from marijuana companies were most distressed. But it turned out that 3 days later, the marijuana industry crashed. And it wasn't because I said sell, it was because it was going to crash. You could see it was going to crash. Anyone with any set of eyes could see the valuations were ridiculous. And they were farming, right? Marijuana companies are just farmers. So eventually you're going to get the same product from Kenya and Ethiopia and India, and it's going to be a lot cheaper, and it's going to come by the boatload. And then what, right? So for me, I don't want to be growing coffee. I want to own the Starbucks store. I don't want to have a blockchain company that's going to set up some rigs. I want to have the blockchain company that has guys that are creating some sort of financial app that JP Morgan's going to put into use, you know? So right now, that's my mantra is proof of business. It's not what have you got in the ground, it's what's different about your story than the other 15 people waiting behind you in line to tell it.
Okay, now you made an interesting point about the Bitcoin bull market creating a new population of investors because it moves fast. It's like gambling. A constant debate that we have at these conferences is Bitcoin versus gold, and we debate this at several of our shows. A lot of investors feel that Bitcoin is stealing gold's investment dollars. Do you believe that to be true, Chris, or is the Bitcoin market creating a new pool of investors that will eventually transfer into gold investors?
So to me, when I think of investment, I don't think of somebody who buys gold because it might be worth more in 3 months. To me, if you're a gold investor, it means you've bought gold for the next 3-5 years. You've bought a company that is worth 10 cents now and might be worth $3 in 3 years' time. What we're really dealing with crypto, to the large extent, is gambling. It's a high volatility, it's high risk, high reward. Yes, there's going to be use for it, and yes, the economies of the world may crumble, and it might be ultra handy to have when that happens. But for the time being, you're betting it's going to be worth $1,000 more for a Bitcoin tomorrow than it is today. My problem with that is I can't tell which way the wind's going to blow on that, because there are people out there with way more Bitcoin than I'll ever have that in the morning could just decide I'd rather have Ethereum. And so 1 million Bitcoin suddenly disappear into the world and the price crashes and there's no news to back it up. I know that if the price of Cobalt comes down, it's probably because Elon Musk said something boneheaded and everyone thinks there's no future in Cobalt. But when Bitcoin comes down, it just comes down. And when it goes back up, it just goes back up. And there's no rhyme or reason to it. There's no giant companies that are saying, we're going to make a Bitcoin play. It just goes. So that's not an investment to me. It's a gamble. And if that's your deal, if you're a poker player, then fine. If you think you can beat the market, then beat the market. But I like to know what the market's actually doing before I try and make that shift. In gold, at least, it's still attached to real-world forces. So, I can tell that the President of the United States is insane and likely to start a war at some point. That's probably a good time to get into gold. I don't know if it's still a good time to get into crypto.
Got it. Okay, now this question's for the panel altogether, anybody who would like to answer. Tying those two subjects together, there's a number of companies, and some are here, that are creating gold-backed or silver-backed cryptocurrencies. Do you think there's a space for that? Is it viable, or what's the purpose? What do you think?
I certainly think it would be a great idea to have gold-backed cryptocurrencies because it meets demands of not only gold buyers but also the millennials who want to be able to trade things electronically. So it certainly would be a great thing. I don't own any cryptocurrencies for the simple reason I don't know how to put a value on cryptocurrencies. If cryptocurrencies are backed by something real, it will become so much easier for me to actually invest in them.
I would just say that there's value in the utility of cryptocurrency and blockchain tech. So the ability to send large amounts of money around the world across borders in an instant certainly gives it value. You really weren't able to do that before cryptocurrency came along. And the gold-backed crypto, I think, is a great idea. One amongst many types of cryptocurrencies that you might consider having in your portfolio. I think having them on the blockchain probably increases the efficiency and the ability, again, to transfer that wealth from place to place, and decreases the chance of fraud. You have a public, verified, immutable ledger of how much gold is backing it, what the numbers of the gold bars are that are backing it, so you could have a little more maybe trust in a company that's doing a blockchain-backed or gold-backed crypto.
Okay, thank you. Now, what I'd like to do next is run through a number of commodities that have been covered at this show and get your thoughts. If you're a bull, if you're a bear, if you're impartial, that's all good too. You can't be an expert in everything. But we're going to run through a few, and we'll start just from my right to my left. And we're going to begin with uranium. And now what's unique about uranium at these conferences is, despite the price of uranium, if we host a uranium feature, I can tell you the crowd in this room will be larger than average. And the video online will do far more views than the average. The appetite is definitely there. But views differ. And so starting with you, Chris, uranium, bull or bear?
Man, I hate uranium and I love uranium. I see all the signs that uranium should be kicking along, but I've seen them for the last 2 years. I will say I like uranium better if I don't have to drain a lake to get to it. There's some interesting stuff in South America on that front. I like that vanadium sometimes comes with uranium. I think that's going to be an interesting thing going forward. But if I was going to try and be the first guy to pick when uranium turns around, I already would have been broke.
Got it. Giant?
I'm ultra bearish on uranium and twice ultra bearish on uranium mining, for the simple reason that uranium mining companies consistently make a loss, and you should not really be investing in something unless you can show value using the spot price of the underlying commodity. Now, if you must believe in the commodity, you should buy that commodity. So you might want to buy futures of uranium in that case. But then there's another problem. Why is uranium so cheap? Installing a uranium electricity plant is extremely expensive. The cost of capital is very expensive. Mostly, third world governments provide sovereign guarantees to uranium electricity generating plants to cover up for what would otherwise be a loss-making production facility. And increasingly, uranium is going to face competition from cheap oil, cheap wind energy, and cheap solar energy. So I really see layers and layers of problems with uranium mining and even uranium.
Thank you. Jason?
Yeah, there's probably going to be another run in the uranium price higher at some point, but long term I'm bearish. I think there's going to be better energy sources as technology moves along, and certainly ones that are renewable and less risky, as we've seen with Fukushima and other places. They build these right on the coasts, and there's several in California where I'm from, where a big earthquake or tsunami hits it, and you can have a similar kind of things happening, and that's clean up for decades. And I'm just hopeful better renewable energy sources come along and we won't need to rely so much on nuclear power in the future.
And I think Kazakhstan produces 40% of the world's uranium right now. If you are looking at a uranium play, are there jurisdictions you like more? The Athabasca Basin, Texas?
I like what Blue Sky is doing in Argentina. It's uranium you could pretty much drive a tractor through the ground and pick it up rather than having to remove a mountaintop. That's one play that sort of stuck out at me. But the moment uranium makes a real move, there's going to be a lot of merger and acquisition activity that's going to suck up a lot of these smaller guys that have been around the edges for a while. And it's just too unpredictable to really hang your hat on at this point, I think.
Okay. Oil. Chris?
It would surprise people that follow my demographic to learn that oil is where I'm putting my money right now. Every time I fill up my gas tank, it's like a glaring advertisement for where I should be investing my money. Electric vehicles are great, and there'll be lots of them, and there will be a lot more not electric vehicles around the world. We've invested in a couple of plays in Mexico that is liberalizing at the moment, opening up considerably. We've done well on those. environmentally, I wish oil was not a thing and that we didn't need it, but we do. And so if someone's going to make money on it, it might as well be me.
All right, Giant.
Well, in my view, oil consumption will continue because the world continues to grow economically, but oil price will have a cap at some point of time because fracking and other sources of oil ensure that oil price can no longer go above a certain limit. I don't know what that limit is, $80, $90, but it's not going to $150 in my view.
Jason?
In the near term, I think it's probably run too far too fast at current prices, so I'm bearish both in the short and in the long term on oil.
Okay. Lithium.
Oh, man. I've made a lot of money on lithium, and then like the wheat market, I knew when to pull the plug and go and play with something else. The lithium ion space is great. There's going to be lots of need for batteries, but lithium isn't the most prevalent part of the battery, and it isn't the hardest bit to get. So I'm not in anything lithium related right now.
Jan?
Again, the problem with a mining industry is that we tend to supply too much money to mining companies, which means that production of commodity goes up faster than the demand actually goes up. Demand for virtually every commodity has gone up hugely over the last 2 decades. The problem is mining industry has oversupplied virtually everything. Lithium faces the same problem. Consumption of lithium will continue to increase, but have we not structured lithium mining industry to oversupply lithium? I don't have a view on that specifically, but I think this is a problem investors of mining industry consistently make, which is that they contribute to oversupplying those commodities.
Yeah, I'd agree with that. Certainly demand's going to increase over time as EV battery demand increases, but so many companies are ramping up production right now that I'm not sure that it's going to have a upward push on the prices. I've owned Galaxy Resources, an Australian lithium company, for the last couple of years, and it's done well as it's moved into production, but I think there are other sectors where we can have a better expected returns.
Now, on all of our energy metals panels today, people were discussing Elon Musk's call with analysts, and he made some comments about cobalt that made people very bearish, very concerned. What about cobalt, Chris?
I like cobalt. Cobalt is an investor's dream. There's not enough of it, and that there is achieved by hanging little kids on ropes and sticking them down holes with sticks. Our cell phones melt down every now and then because the supply of the elements that go into it are from unreliable sources and with inconsistent grades, and they're not processed properly. And that, to me, is an opportunity. That when cobalt comes online in North America and starts becoming a reliable product, it's still going to go up in value because it's going to be local. It's not going to be kids hung on ropes anymore. But we need a lot of it, and everyone here has it in their pocket and in their car, and it's in that screen, and it's in the sprinkler system. Cobalt's not going anywhere. And yes, there's means of removing cobalt from the equation and making batteries without it. I understand the Chevy Leaf doesn't have cobalt necessarily in the battery. The vanadium redox loop batteries are going to be a thing with electrical grids. That's going to be, I think, bigger. But cobalt is here to stay, and I think especially where the prices of some equities that are in that space are right now, there's money to be made.
Got it. Thank you. Jan?
I would say pretty much exactly what I said about lithium earlier. And I want to add that I know at least one company in Switzerland that is warehousing cobalt right now. So my question is that, is there really a shortage of cobalt? And does this mean that when this warehoused cobalt starts coming back to the market, it might actually reduce the price of cobalt? I don't know exactly what the supply and demand situation is, but I would just say pretty much what I said about lithium earlier.
Right. I have a similar view, although certainly the price trajectory of cobalt would suggest that the supply-demand fundamentals are favorable. And I bought into Ardea Resources, another Australian play on cobalt, and they have kind of a concentrated cobalt deposit, but it's kind of suffered over the last 6 months or so. So I think prices have probably run too far on a speculative mania with cobalt, and I would expect a bit of a correction, but it's hard to predict out into the future because of how technology changes with batteries, and it's hard to say where the demand will be, but in the near term, I'd say I'm bearish.
Okay, and possibly the most important energy metal, copper. This is our last one. Chris.
Is Gianni around?
We could find him.
Gianni Kovacevic, if you've not heard him speak, you haven't been to one of these shows before, because he's been here the last 2 years. At every opportunity, he'll tell any group of people exactly how great copper is going to be. And he's not wrong. Over the last 2 years, the price of copper is up 80% or so since he started telling that story. The demand is always going to be there, and I think as the crypto market, as the servers that have been brought online by the millions over the last few years start to burn themselves out, you're going to require a lot of replacements of that gear. I think that the electric vehicles, you're going to have copper requirements there, and lithium-ion batteries, you have copper there. There's copper in just about everything, and it's not a fashionable thing. It doesn't grab you like gold does, and it's not fashionable like lithium is. But it's you look at the numbers. Demand is up, supply is down, prices are up. The juniors haven't really tracked that yet, but I think copper is one of those spaces that I've always got one hairy eye on.
Nothing to add to that.
Jason.
Yeah, I'm just more bullish on monetary metals than on industrial metals overall. So certainly the fundamentals seem pretty strong for copper in the near term, but I think the bigger gains are going to be in monetary metals when there's economic crisis or lost faith in fiat money and people move to something. They're going to be moving to gold and silver, not towards the industrial metals. So those would be my preference.
Okay. So that's it for the panel, ladies and gentlemen. Please give our panelists a big round of applause.